Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Landon Swan. He's a co-founder at LikeFolio. Welcome back to the show, Landon.
Thank you, Tom. Good to be here.
All right. So I made you guys pivot today on this. We were going to talk about Dollar General, but I kind of wanted to hit on Starbucks because the pullback that we've seen, it's moved down about 10, 11% over the last couple of weeks, and that's on a 12-session losing streak. It's righting itself today, but do you guys have data that's supporting maybe some of the other metrics that are out there that are saying that sales are slowing down?
Short answer, yes, we do. So, when we look at one of the things that we love to look at around this time of year is the holiday drink season, right? How are people reacting to a lot of the holiday drinks? I think that is kind of a barometer for just general visits, and that's down about 11% on a year-over-year basis. People are less excited about them. Happiness is down slightly. It's under levels of Chipotle and McDonald's, which you shouldn't be at Starbucks. It's at 61%. It's down about a point, and then web visits are also down a little bit. So overall, yeah, everything that we've got is not super bearish, but it is definitely leaning towards kind of a meh session, right? Like, not so great. And, when you look at what happened with the stock, I mean, it was trading around 91 before their last report. They had great same-store sales, plus 8% on a year-over-year basis. But I think they've pulled back their guidance just a little bit. And that gap up was big, and it ran up to, I think, around 107, 108. And now it's sort of filling that gap on the way down with, like you said, several trading sessions in a row lower. We'll see today if they can hang on and break that streak. That'd be nice, but everything that we've got is showing just a slightly worse than expected kind of outlook for this quarter or the quarter moving forward. So, with labor union problems coming to the forefront, they're being passed by Luckin in China. So there's a lot of stuff that is just on the bearish edge of neutral for us. Again, we're not, saying that you should buy puts or short the heck out of this. It's just we're not excited about this name as we have in the past by far, and we're just a little bit leaning towards the bearish side on the other side of neutral.
Landon, fiscal fourth quarter, revenue up 11.4%, net income up 38.8%. They're seeing both traffic and size of average ticket price rise during the quarter. So really good metrics out of Starbucks in the last quarter. You saw what the stock did. Tom mentioned the violent sell-off up until a day or so ago. Now starting to firm up. But Landon, is this a China problem, right? A lot of their growth comes from China. Are you seeing, I know that you are a domestic, your data comes from domestically, so we can stay there, but whenever you see weakness in something like Starbucks, you know that their growth is going to come from China. Are you seeing weakness in the U.S. data that would just compound potential slow recovery in China?
Yes, we are seeing weakness in the U.S. data, and it's not tremendous. I mean, we're talking about -2% here, -1% there, -11 on some of the holiday drinks and things like that, and just mentions in general. So it's not like a huge shift. So I'd make sure that that's clear. But we don't see a ton of growth in the U.S. We're seeing it pretty much flat. I mean, a lot of the studies that we do, a lot of the metrics that we track have a margin of error, in the small percentages. So when I'm talking about -2, -1, you can call that basically flat on the year, but that's not what investors want, right? They don't want flat on the year. They want growth. And this is, it's a bit of a growth company. There's a lot of growth priced in. And if you're not getting it in the U.S., you have to get it from China. And then if you're not getting it from China, then you're selling the stock. And I think that's kind of what we're seeing right now with this dip. I think it's 11% in the last few weeks. So, again, we'll see if they bounce back today. So far looking good. Day's not over though. If you're just not getting the growth in the U.S., you're not getting the growth in China, you've got the labor union issues that you're potentially going to be a big threat over the next year. I don't see a reason to be pushing money into this. If I held it, maybe I'd sell some calls or something, but maybe I wouldn't dump the stock, but I'm definitely not getting in at these levels. Maybe if we test our lows under 90, then it might make more sense. But right now, frankly, the price seems fair where it's at, and the sell-off jives with our data. It makes sense.
Yeah, I think if you look at maybe some of the inflationary pressures landing out there, the restart of student loan payments also, but a lot of the credit card data that I was seeing on top of the data that you're giving us, that sales are weakening. Now in China, their stock market, their CSI 300 just hit a low for the year, so we're seeing that impact to their second biggest market over there. But is this an inflationary story where, hey, those pumpkin spice lattes are falling out of favor because they're
both actually.
Both, yeah. They never were in flavor, but they're falling out of favor. I mean, is this an inflationary thing where, hey, it's $7 for a pumpkin drink, $9 for a pumpkin drink? It's just getting exhausting on the consumer.
Yeah, it is. I mean, these are high prices, and I think that generally speaking, the customer of Starbucks has been more affluent. They've been more resilient towards price increases. But every time you go up 10%, you do lose a certain percentage of customers. Now, maybe that percentage is smaller than if you're talking about Dollar General or McDonald's or Walmart, but you definitely lose some percentage of customers. I'm not sure what the delta is there, but it's not great to increase prices. And so once you start making that choice and you say, well, am I going there 4 days a week, 5 days a week, and I'm spending $10, $12 each time, it can add up. And I think that as the consumer's pricing power is weaker than it was a year ago, 2 years ago, it's going to start factoring in. Again, not nearly as much as other companies. They have they have a little bit of a barrier there, but it's not impenetrable, and it's not completely inelastic when it comes to the demand side and when it comes to price. So yeah, I think that once you get in these holidays, drinks are $7, and they're 800 or 1,000 calories. Some people are going to start making different choices.
Yeah, I definitely have, because I usually buy and I make Jenny Horn fly for me, and that used to be once or twice a week. Now I'm down to like once or twice a month, because every time I look down at what I'm paying, it's $20, $25 to send her on a run over.
Yeah, but here's the other side. I don't drink coffee, but I have a 17-year-old that just discovered Starbucks. Yeah. And I'm like, whoa, yeah. Look at it.
Every time I pay,
whoa.
It's like that, whoa. It's just coffee.
So I'm a big Starbucks customer, though I don't drink coffee, Landon.
That's awesome.
All right,
I love it.
Great stuff, great data as always, Landon. Appreciate it.
Thanks, guys.
All right, that's Landon Swan, co-founder at LikeFolio. So, Kevin, I mentioned the 12 session